informative and enriching. I hope you have been able to use this time to network. Let me remind you that you will have two such opportunities as we progress during the day. While most of us talk about banks, the end user needs banking and not just banks. To moderate the next topic on neobanking in Indian context, pushing global frontiers in innovation, I would like to invite Ram Venkatramani. In his most recent stint, he was the lead investment advisory at Crystal.ai and was associated with Globalize before that. He's a CFA charter holder and holds the CIPM designation. Over to you, Ram.
Banking has come a long way. I don't know how many of you have had actual experience of writing a check to yourself, go stand in the line, collect a token, just to take some cash out of your account. So we have come a long way ahead from there. While digital banking has opened up new avenues, when we talk about neobanking, it's a whole new paradigm and a whole set of new stuff that we can look forward to. So to talk about that and elaborate on what the neobanking is all about, it's my pleasure and honor to welcome on stage Mr. Raghunandan G. He's currently CEO and founder of Zolve, and he's a really well-known entrepreneur. Before Zolve, he founded the taxi aggregator company, Taxi for Sure, and sold that to Ola Cabs for $200 million in 2015. Ever since, in addition to running Zolve, he is also an angel investor in multiple startups, including Vedantu, Bounce, and Ninja Cart. And he's a pretty active participant in the India startup ecosystem, and he mentors a lot of budding entrepreneurs. In 2014, he was among Fortune India's 40 under 40 business leaders, and he's also been honored with the IAIP Young Alumni Achiever Award. I don't know how much spare time he has, but he's also an avid reader, and he's a marathon runner and an Ironman triathlete. So please welcome Raghu on stage.
This, when it came to banking, one was the access to the banks from the customers itself, right? Few years back, visiting a bank itself was a full day activity for a lot of people, right? So when they are working, the bank also works in the same working hours, right? And the banks are located in a particular location. So people have to take a day off, go to the bank, and then do that, right? And when we get into the bank, right, paper forms had to be filled, and people were not comfortable with English or a Hindi or even their vernacular languages. For every transaction, paper forms had to be filled. And the third big challenge was whenever you walk to the branch, right, they don't talk about the existing products that they have. They only talk about the new products that they are introducing. So because of which people didn't really know what all one can engage with the bank. So people just thought that the only way to really use the bank is to deposit money and withdraw money. All right. So that's where how do you address this? How do you really make this entire banking seamless and make it so customizable, personalized to the customers, where people can access the bank whenever they want to. It need not be a full day activity, and they can engage with it in their vernacular languages, probably voice inputs itself. And somebody can take them through what all the banks offers, not just the savings bank account or a current account, but there is FDs, RDs, dual loans, multiple things, right? So that is where I think the neobanking really came to the picture, to really help customers realize the full potential of banking than the perception that they had about the bank itself, right? So no working hours, 24/7, no language constraint, no paperwork, right? Whatever the mode that you are comfortable with, you do that. Right, and given the digital penetration in India is increasing, mobile penetration in India is increasing, data penetration in India is increasing, right? So people already have that in their hand, right? How do we get banking to them? That's where the neobanking really came into the picture.
Thanks for the introduction on neobanking. And I know you have experience both looking at the ecosystem in India and what's happening outside India. Do you see parallels, or is it very different from what neobanking is in India versus, say, in the US, for example?
Oh, significantly, actually, right? So there are a significant number of positives that are happening in India, and a lot of challenges also, which is not really there in the US. To talk about some of the pros that happens, right? I think the Indian financial services ecosystem is significantly evolved compared to the rest of the world. Right. So we are probably one of the first ones to start with UPI. Right. Then Brazil followed up with PIX. Right. US is still struggling to figure out how to do the Fed now, which is similar to UPI and similar to PIX of Brazil. Right. That's not really there. So currently, if you want to really do money transfers between accounts in the US, it takes 3 to 4 days. It's ACH. It's batch processing. I think we have moved away from batch processing for a very, very long time now. All right. So the business that we are in, Zol, which will helping migrants, right? So people who are going from India to the US, they have experienced UPI. They have never visited a bank branch. Right, and all of a sudden they are, and everybody thinks that okay, US, I'm going to the US. So if India is here, so US must be somewhere else. So once they go there, they realize that oh, what I need to fix an appointment with the bank, stand in the queue, and then get a card. Right, and I transferred money, I paid my credit card bill, but it's not reflecting in my bill. I've got late payment charges because it has taken 3-4 days for it to really get processed. And then there are these bank holidays, there are weekends and stuff like that. Right, people just can't accept that. Right, so that's the huge shock, not just culture shock, right? Huge financial shock, right? They haven't paid late payment charges. The credit history has not been hit here, so there they go. They have to struggle with that. So there are certain those kind of challenges, right? Where in the US markets compared to what we see in India, right? But some of the things that really works out in the US markets to do this, right? The infrastructure providers are significantly better. We don't have the infra providers yet. Right. By infra providers, what I mean is the guys who act as a conduit between the traditional banks and the fintechs. Right. So there are these processors in between, who stands in between the bank and the fintechs. Right. That is significantly evolved in the US markets. Right. So because of which any new fintech who have to start, right. So they already have all this. They have people to connect with the bank from the savings bank account, credit card management systems already been in place, fraud management systems in place, compliance management systems in place. Everything has been readily laid out. So it's more like a plug and play. So I mean, loosely put, right. You can see that as AWS. You have AWS equivalent in banking. We don't have that yet. Right. So one thing that we need to do is we just have to do a partnership with the bank. Once you sign the contract, you are ready to go. Here it takes a lot of effort to start integrating banks on the traditional systems. We are in probably the futuristic systems. There is no intermediary between who actually couples the two and stuff like that. That is still not there yet. Right. So that's one is the infra thing. And currently in India, almost all the neobanks are targeting a completely wider segment of the customer base. It's like everybody is trying to do for everybody, right? Whether it is Epify or a Jupiter or a Neo and everybody, right? So they are doing it across the customer segments. But in the US markets, you have folks targeting specific segments. Right. So there are this majority and people like that only focusing on migrant customers, right? Chime looking at the subprime customers. Then you have the other guys and stuff like that. So that's there, right? In India, everybody is trying to do everything all over the place. So that's been the thing. And there, I think the larger banks want to work with some of the neobanks to do this, right? But in India, I think we as an ecosystem hasn't really gone there yet. I think some history here. I think in the when we started Taxi for Sure in 2010, right? The attitude of the incumbents then was, "Iska kuch nahi hoga." Right. So this is so we know the industry, we know the customers and stuff like that. These guys, these startups are not, right, will not be able to crack it. What is that they know that we don't know? We have been in the industry for such a long time and stuff like that. That was the attitude, because of which all the startups had ample amount of time to crack the market, because there was no race, right? Over a period of time, right, so when incumbents started realizing that they are losing out to some of these startups, right, across industries, not just fintech, right, they start thinking, oh boss, we should also do something. हमें भी कुछ करना है. So they started working on, so they put up the innovation cell, they started putting up digital thing and stuff like that, right? So they figured out. Then the market currently in India is moved to a place where it's become a competition. Whether the large incumbents, right, who have access to a whole lot of customers, they have cracked the distribution, are they going to crack innovation first? Or startups, fintechs, who already cracked innovation, will they crack distribution first? So currently we are in the race where the incumbents are trying to crack innovation, the startups are cracking distribution. So it has now become a race. But in the US market, it has evolved to a stage where the large guys are like, okay, fine, you guys are good at this, you do this, I will acquire you. right? So it's very difficult for us to really in the systems, processes, the bureaucracy that we have within the org, right? It's very difficult for us to crack innovation, right? So you crack innovation, get to a particular size, we will do that. So you see some of the large banks in the US, right, having what you call funds to start investing in fintech startups, right? So with a path towards acquiring them once they crack innovation and stuff like that. But in India, we have SBI doing Axis doing their own thing, Kotak doing their own thing, right? Then you have Epify, you have Jupiter, you have Neo, all those guys trying to do things independently. So, but the industry will get there, where the large guys also will feel that it's better that we start investing in these startups. ICICI probably has started that on that bit, but over a period of time acquiring some of these fintechs, right, will happen. So the consolidation is going to happen, but whether it's going to happen in the next 1 or 2 years or the next 4 or 5 years, it's only the time will probably tell. But that's where the US startup ecosystem, fintech ecosystem in the US is, and the Indian fintech ecosystem will also probably follow the similar path over there.
So that I think brings me to the next point. There is consumer choices and consumer preferences, right? So ultimately, the existing players are also targeting, consumers, and the fintechs are also targeting the consumers. So is there a big difference between how consumers themselves view these businesses?
Oh, so significantly, right? I think so. One is to really look at on the supply side, and the other is to look at the demand side. All right, demand side is more of the consumer thing that you're talking about, right? Supply side. And not just in fintech, right? In most industries, right, the incumbents want to offer customers what they have, right? I mean, it's a generic rule, not that everybody follows that, but bulk of the fund companies follow this. But most of the startups are in the business of providing customers what they need and what they want, right? So everybody is building a consumer business itself, right? All right, but the approach is selling something what you have. Right, providing customers what they need. That is where the difference really comes into the picture, right? And why that gets, right? So if you talk to the founders of some of these large incumbents and stuff like that, right, they have this customer obsession. But once the organization becomes larger, right, that translating that customer obsession at the senior most level to the junior most level becomes much more harder. Right. So because of it, the information flow from the bottom doesn't go to the top, who is more customer obsessed. But in a startup, because the founders themselves are doing whatever that needs to be done, they are executing themselves and stuff like that, right? The information input from the feedback from the customers is instantaneous. Decision making on that feedback is even more instantaneous. So people, startups are a lot more agile. So do that. So fundamentally, everybody wants to get to the same customer base, but the speed at which people would act, react, respond, right, the agility becomes a challenge between the large guys and the smaller guys, right. Now, why that is important when we are looking at the customer stories, customer wants to engage with somebody whom they think that they are responding to you, right. They are not talking to a black box, they are not talking to a monolith, right. If they provide certain suggestion and stuff like that, right, somebody acts faster, so then you have more affinity towards that. Right, and the startup keeps doing it as part of their own culture and stuff like that, right, then more feedback you give, things only get better and better, right. So what you saw the app, let's say 1 month back, the app is completely different today, right, much more in line with what your expectations were. You want to continue engaging with that, something which doesn't change for months together, right. So that's where the customer perception comes. So how the companies are structured internally has a bearing on how the customer perceives you. And from there, engagement also changes. So that's the reason the customers tend to engage more with the neobanks and stuff like that than with the larger incumbents.
So in that space, so a large app like a UPI, or sorry, a Paytm, does it have a more advantage compared to a niche player within this space?
So one is, see, people start off with a particular niche, right? So I mean, again, getting into how the ecosystem evolves, right? You start with a particular niche because you try to solve the problem, but eventually you end up being getting into the same thing, right? So for example, all of you guys know Netflix. Netflix was a content aggregator, right? Now they are the largest content creator, right? Swiggy was a restaurant aggregator, right? Now if COVID wouldn't have happened, they would have been the largest cloud kitchen player, right? Ola and Uber were cab aggregators, because they didn't want to own supply. But nowadays, those are the largest cab owners, right? So they own the fleet and stuff like that. So the industry itself keeps going through those cycles. Right. So, because of which it's very hard to say that how this is how it is going to play out. You start with a particular niche, right? You build on particular niche, then you start diversifying because you got a loyal customer base, and you see that this particular customer wants these, right? Then you start getting into all those areas. Then over a period of time, you lose that edge, whatever the niche that you are talking about, right? So, then somebody figures out that niche and comes up, right? It becomes a interesting thing there. The better way to understand this is if you look at how e-commerce started in India, right? So, Myntra, Flipkart started at more or less the same time, right? And Flipkart started with books, Myntra started with clothes and apparels, right? And if you really look at today also, right, there are more number of people who wants to buy clothes and apparels than people who want to buy books. So, the largest market was Myntra was after the largest market, Flipkart was after the smaller market, right. It was always Myntra's to lose, not Flipkart's to gain, because till date also there are more number of people buying clothes than buying books, right. And 15-20 years back also it was the same story. But the way Flipkart did the ops and stuff like that, right. So, that they worked on the supply chain, they built certain core competencies. So, the day they opened up clothes and apparels, right. So, I think Myntra took 3 years to get to 500 orders a day, right. The day Flipkart opened up clothes and apparels, they got 866 orders a day on clothes and apparels alone. So, then Flipkart became the larger player, right. But then Flipkart started doing that, okay, if I can do that for books, I can do the same thing for clothes and apparels, I can do it for white goods, I can do it for mobile phones and stuff like that. Every supply chain, which is a similar supply chain, right, they can do that. Flipkart can't do jewelry because you can't put jewelry in a warehouse like the way you put everything else, right. So, that is the reason they are not there yet, right. So, they are scaling that business. So, what Myntra went ahead and did that was they went after personal brands. They carved out the niche. Flipkart started scaling whatever that could be scalable across. So, you figured out a model, now you replicate the model across different categories. All right. So, Myntra lost out on that category. Trying to do what Flipkart is doing on the same category will not really help. So, they went after personal brands. So, they have their 85 personal brands. Nobody knows which are, because all of them are foreign sounding names. How many people don't know which are Myntra's own brands, which are the other things. They went after personal brands. So, they understand the customer preferences. They know what the customers are searching for, what the customers are clicking on and stuff like that. They have the data and they use the data to create personal brands, right. Once you create those personal brands and stuff like that, that is not Flipkart's DNA, right. So, they don't have a choice, oh, you can do personal brands, right. I want to do personal brands, you are doing personal brands for clothes and apparels, I can do personal brands for TVs, mobile phones and stuff like that, I can take it and replicate it. So, you guys understand this, why don't you join hands with us? That is where Flipkart and Myntra thing came together. So, that is what is going to happen. So, you create niches, right, and these niches will happen because the large guy wants to cater to something much larger, they want to replicate whatever that has been working with that. So, any new startup, right, so it is not obviously, right, if you are looking at a 36,000 feet level, you feel that the large guy will come and take you, kill you, right. But if you really go down under, right, you need to really figure out what is your competency, what does the large guy doesn't have, right. Then you grow so fast, either the large guy will acquire you or you become the large guy, right. And that's how it would really take, that's one. The second thing is, if you're talking about the large guy, right, you don't have to compete with the large guy completely, right. So, if the founder who is looking at multiple different things, how much of their mind space, the bandwidth is going on that particular sector, and you are only focusing on this. So, you just don't have to compete with 100% of your bandwidth with 100% of their bandwidth. You have to focus on your 100% bandwidth better than the 10% bandwidth that founder is giving to that particular sector. But when we start thinking about this, no, we only come, oh, 100%, they are also doing this, we are also doing this, they will eat us and stuff like that. But that guy is only spent only 10% of his time on that, but we are spending 100%. So, that is where, right, you can move faster, you are a lot more agile, you do not have much bureaucracy within the org, and you are spending all your time only on this, and that person is only just moonlighting on that particular bet, right. So, there you can create some significant edge over the others, and I have seen this play out multiple times, Dunzo, Swiggy, right, as recently, right, Ola Electric with Bounce, Infinity, right, happens all the time,
Can you think of any parallels within the banking space?
Right. So, banking, I think Flipkart themselves have done a lot of things, right. So, they had their own banking solution, then they acquired NG Pay. PhonePe is the one that really worked out for them, right? So instead of letting PhonePe was started as a separate company by extra Flipkart guys. Then Flipkart got them acquired completely because they saw the future, right? And for PhonePe also it made a lot of sense because Flipkart is sitting on such a huge customer base, right? You get access to the customer base and then you because Flipkart solved the distribution problem for PhonePe. Otherwise, it would have been challenging for PhonePe to take on Paytm. All right, so there PhonePe and Flipkart makes sense because Flipkart wants something like this, and PhonePe wants distribution. So together it comes together.
So eventually, do we end up like WeChat in China?
That is a challenging affair, right? I mean, China is a completely different market, right, where the government controls a lot of things. We kind of live in a open, free kind of an environment, right? So where the customer preference also keeps changing. So there one observation is now we are getting into a place where we need one app to do a lot of things. Paytm does multiple things, PhonePe is also doing multiple things, right? So they're into loans, insurances and stuff like that. But if you really look at the US markets, they have crossed that stage where they wanted a single app to do multiple things. Now they want a single app to do only one thing. So they have for savings current bank account, they have something else. For crypto, they have something else. For splitting the bills, they have something else, right? For analyzing their spend habits, they have something else. So they don't want a single app to do too many things. They want a single app to do single person. So they want to have, they can have multiple apps on their phone, all right? And the call to action is only one thing, right? So as an ecosystem, they have evolved there. So now we are at the stage where Paytm is trying to do too many things, PhonePe is trying to do too many things and stuff like that. Even Jupiter is also trying to do too many things. But over a period of time, the customer preferences is getting evolved. Customers are more picky and choosy. Customers need more personalization, customization. So it will get into, they want this to do that, right? Swiggy started with food, they do groceries, they do Swiggy Genie, everything, right? So single app which is getting, from there, from the company perspective, it makes a lot of sense because it's aligned with their business model, but the customer preference is not that. Customer wants to, for food I'll use Swiggy, for courier services I've used Dunzo, for something else, groceries I've used a Big Basket or a Zepto and stuff like that. So customers are getting more and more pickier and choosier on all this. So yeah.
So from a scalability perspective, so even now typically banks, bulk of their income comes from interest margins and maybe from transaction fees. So when we start doing these hyper personalization, is that scalable at levels that can make it really profitable?
Oh, exactly, right. So that's where the data really comes into the picture, right? I'm not really sure how much, what is the kind of importance or significance the incumbents are providing to the data that they're gathering with customers. The customers would be shouting out loudly to the incumbents, telling that I want this, I need this and stuff like that. And there are people who are willing to pay. All right. So in India, I don't think so. We have anything called a subscription services for any of the banking apps and stuff like that. Everything is free, right? In the US, some basic features are free, right? Then there is a tier where you need to pay $5 per month to really avail certain additional features and stuff like that, right? Then there is a much higher tier, right, where much more personalization is done, much more customization is done. So it all depends on you as a customer, how well you get, right, figure out your customer segment, right, and then catering to the customer segment. So then people are ready to pay for few things that they need, really badly need. All right, so that will let you make your unit levels profitable. So currently we are not there yet, and customers are willing to pay. If you look at let's say Swiggy Super or Zomato Gold and stuff like that, right? People are subscribed to that, or Amazon Prime. People are subscribing to some of these, right? But now that has to get translated into some of these banking apps also, where people are willing to pay for the additional set of services. So that takes care of your unit level economics, and that is scalable.
So I mean, this gets me to an interesting point that TCM pointed to in his previous presentation. He said, we Indians tend to expect the best in class services at lowest possible price. He basically compared getting a BMW at the price of a Maruti. So would a neobanking solution that has a tiered fee structure take off? That's, I mean, what would be the challenges that one need to overcome to achieve that?
It's a bigger structural challenge actually. Right. I think again, when the startup ecosystem in India started evolving, right, in 2010, the per capita income in the country has been was $1,300, right? Over the last 12 years, it has moved to $2,000 to $2,200, all right? But if you look at Indonesia, that is at around $8,000, right? US is at $65,000, right? So, but most of the companies, right, the costs are now matching. So, earlier there was a huge disparity between the cost in the valley and the cost here, the engineering cost, the manpower cost and stuff like that. But now because of the opportunities, most of those people are moving their offloading some of their development centers in India. So, the Indian costs are increasing significantly, right? So, the cost that the startups are incurring is significantly higher, right? But the revenues are still in INR. The costs are reflecting USD cost, but the revenues are in INR, right? And whether you want to increase, ask customers to start paying, if the per capita income hasn't really grown the rate at which it has ideally it has grown in other countries, right? Even though customers want to, they just can't. It's become an ability question, right? That's the reason. So, companies have to really figure out who are these customers who can afford to pay for this. So, that is where right, if you really look at credit, right. So, if you the average is $2,000 per capita income, the guys who have got credit cards, right, they are on a much higher per capita income,
Right.
all right. Those people have the ability to pay. Will they pay or not is a question, right. If they do not have the ability, then whether they decide to pay or not is of inconsequential. First you figure out the ability, then you need to really figure out how do you get them to pay. Right. So, even we right, as Zolve also we are looking at cross border and stuff like that, right. So, most of the people who are migrating are the ones with a higher per capita income.
Right.
They are the ones who can pay for services because they have the ability. Now, how do you provide the distinction, how do you make the value proposition so attractive to them so that they do not mind paying because they can pay. In India, most of the startups were stuck with people not being able to pay. Right. So, first you crack the ability whether these customer segment can pay or not, have the ability to pay or not. If they have the ability to pay, you just have to really experiment to really get them to start paying for those services. It is not a mentality issue, it is an ability issue.
Ability issue.
Right. So, we have to distinguish. So, what TCM is saying is correct, right, there is no difference there. But when you go one level deeper, you figure out ability, inability. Then you go after the ability people, then you experiment with those people. So, if you go after the inability guys, right, so then it does not happen. You need to really figure out a different way to monetize those customers, right, to make sense of the unit level economics. You go after the people with ability, you can play around, you can experiment, you can do a lot of things to really figure out how do you get them to pay, because people pay. Right, it is not that nobody has subscribed to services. Amazon Prime is a good example, Swiggy Super is a good example, Zomato Gold is a good example, right. A daily newspaper is a subscription service, right. Daily milk is a subscription service, right. So, all those people are paying for subscription, but they need to really see value.
So, you say the way forward is a more subscription driven model rather than
for you to make
make
sense, because if you are going to get into personalization and customization, which is something that the customers need, right, then you figure out whether they want to pay for something like this, right. Make the customer decide. No, you do not decide as a platform, you let the customer decide. So, there is this opportunity whether you want to or not. So, yeah, customer is the king.
Interesting take on that. Like you were alluded to ability and willingness. So, we do that in our CFA Institute curriculum as well, and we evaluate risk taking ability of investors, the ability to take risk versus willingness to take risk. There is always a
I think fundamentally everything boils down to ability and intent. Right. I mean everything, I mean credit card underwriting, loan ability, intent, across everything it comes down to that itself.
Now we come to the gorilla in the room is the regulation. I think that's the largest hurdle in terms of neobanking in India. How do you see that? Do you have an opinion on that, and or do you see that going to evolve in the future, or the?
No, I think that way India is, even though it's painful, India is phenomenally receptive to all this, right. I think RBI has been sending out those white papers, right, consultation papers to take feedback from the industry. It's not that even though it comes across as diktats from the government and stuff like that, right, there are a lot of consultation. So, there are these panels. So, RBI Bangalore has these panels for people to come and talk to them, all right. So, they want to really understand and they want to do that, and they move extremely fast, unlike any other thing and stuff like that, right? They move extremely fast, right? So, but taking a couple of steps back, right? The 2008 recession across the world didn't hit India that badly, right? And whatever the recession that we are currently seeing in the US markets and the European markets, right, it's still not observed in India yet because the markets are still high up. All right. All this is primarily because of the certain policies, certain guidelines that the RBI follows. All right. So, it's a productive environment, right. The cost of the protection is moving fast. All right. But the benefit of this protection is that we are kind of insulated from the recession in the markets. So, that's a call. So, as a country, for whatever good or for bad, we have taken that particular approach, right. So, good years are not really that great, bad years are also not that really that bad, right. So, our oscillation is not our right, volatility is not so high, right, which is good. In that, given that volatility, and if those people are willing to listen to industry players and stuff like that, right. So, after RBI came up with this prepaid credit card kind of a rules, right. So, they asked all the startups to go and talk to them, the CFOs across multiple VCs went and met the RBI folks. So, there is a lot of discussion. It is not like I have said this, you follow this, no, right. Currently, let us do this. I do not want exposure, right. You come and tell me these are my concerns. You come and tell me how are you going to address these concerns, then work together and make it. Right. It is not that in let us say in the taxi service, right, they are like, okay, I do not understand what you guys are doing, why don't you come and tell us, right, but you do not have to stop. RBI is like, I do not understand what you guys are doing, first stop this, right, let us have a dialogue. Once I am comfortable, let it go, because if I let it go like this and it is not in line with what I really want and stuff like that, and then the customers are at risk, right, there is a lot more different challenges. So, the way the different ministries work and the way the RBI works is a lot more different, but it all comes from the legacy that we are following. So, the legacy is a different debate, whether we want to have that limited volatility or extended volatility and stuff like that. But if that is a legacy, this is probably the right approach. But the best part is they will listen, they want to help, right, and they move extremely fast. So, that's been the case. So, that's the reason that all these innovations are happening. RBI is stepping in, giving in more licenses, right. RBI is letting up right, NBFCs to be acquired by fintechs and stuff like that also, right. So, a lot of innovation that is happening because they feel that, okay, they want to protect the customers, they want to protect the economy, they do not want to risk any of those. But in that ambit, what are the different things that are possible to be done? So, they want to, they listen. So, it's been a great thing there.
Right, and even Gift City has a sandbox facility where innovations can be tested out.
Yeah, multiple. I mean, even going ahead with something like a UPI itself is a big thing, because the RBI or the government does not look at precedents. Most of the, probably I do not know, TCM is there or not, but most of the investors look at precedents. Tell me where else in the world this is happening. UPI is like one of the first in the world. The government is not looking at precedents. It makes sense for our country. Let us go ahead and do this. Now, everybody else, Brazil is doing PIX based on UPI, right. US is doing Fed now based on UPI, right. So, we become that example for the rest of the world. So, we do not wait for precedents, right. That I think is a significantly forward looking outlook. All right. Otherwise, it's easy to say, oh, it's working there, or these are the things, oh, these are the challenges that they face and stuff like that. How do we do this? This is how most of the startups really work also. But the government and the RBI has taken a completely different stance altogether, right. We understand our population really well. We understand our customer base really well. This is extremely relevant for our base. So, let us get it done. Whether there is precedence or not, no precedence, I do not care. This makes sense, let us do this. Setting up the NPCI, the government banking it, because you can't do it with only one single body. The entire ecosystem has to come together for something like an UPI has to become successful.
Right.
Right, and it is a success, and UPI has been a case study across all the countries. There is no fintech symposium or a conference that happens across the world. Currently, as we speak now, there is a Singapore fintech festival going on. UPI is there. Dubai fintech, UPI is there. US Money 2020, UPI is there. Everywhere, that has become the thing, and that wouldn't have been possible without RBI or the regulators being part of that. So, a lot of positive things are there, but the challenge is, right, we only talk about some places where we have been pained. Right, that takes most of the mind space than this, but it's been good, could be better obviously for everything, but as long as the dialogue keeps continuing, we are evolving, things will only get better from here.
So, does this give Indian players a lot of advantage when they venture out, like global players like yourself? Having worked with a lot more sophisticated system here, does it make it easier to scale your business outside the country?
Oh, it makes a lot of sense. So what we're trying to do is we're taking the best of what we see here and best of what is available there and trying to marry the two. All right, and we get an opportunity to iterate more often. It's not that we have to get it right the first time itself. We get to iterate more often, right? So things would only get better and better, right? Or some learning that we have had there, we are sharing it with other neobanks here, right? Some of the things that we have seen there, we are helping some of the regulators over there, right? It's like a cross pollination between multiple countries. So the end result could only get better and better.
I have an interesting question from the audience. It's a little tangential to the topic, but the question is, so you have been a founder and a successful entrepreneur as well, plus you're also a investor across multiple firms. So which hat do you wear more often when you look at your investment companies? Do you look at it from an entrepreneurial view or more as a investor?
Oh, it's more entrepreneurial in nature, right? So when you wake up every day, you see so many problems all over, all across you, right? So then you really feel that, oh, this problem is interesting, this problem is interesting, right? And there is a good solution for this and stuff like that, right? But you can't really try to solve all the problems simultaneously, right? You identify some problems and you find some great teams working on those problems, having some amazing solutions. So then they want to be part of their journey, right? And whatever learning that we had in while building my previous venture or while looking at other ventures very up close and stuff like that, if we can pass on those learning for them and reduce their mistakes and probably put them on a path to succeed, because that's a problem that you can identify yourself with. So instead of you trying to solve the problem, somebody else is trying to solve the problem, and you can share whatever your learning is. So by virtue of it becomes more of what do you call more of an entrepreneur thing than investor per se, because I think all of us were in the same boat. Right, some people are ahead of the boat and some people are in the behind the boat. I mean, it's a lonely journey and stuff like that. You just want to really help out other people. So that's one. And the second thing is, it's more like paying it forward. When we were building my previous venture, right, a lot of people came together and helped out, right? It's very difficult for me to go and help those guys back, right? So the only thing that I can do is to pay it forward. So helping other folks also to really do that. So money can be made, all right? When you have money, I mean, after a particular point in time, right, the money loses value, right? After few thing, right, adding few more zeros to your bank balance will not really make much of a difference. Then the only thing that is left is that. And over a period of time, doing angel investments, what I figured out is the entrepreneur sees me as a fellow entrepreneur.
Okay.
Right. The investor sees me as a fellow investor because I put my money. All right. So because of which I kind of play that in between place. Right. The same thing what the investor is saying, if I say, the entrepreneur is a lot more open to listening to the same thing. Right. It's the same thing what the founder is telling to the board. If I say the same thing, the board is a lot more open to listen. So I don't have to really do that. So I kind of play a role of a catalyst there, right? So trying to address most of the communication gaps, communication challenges, the intent behind. So because of it, the founder is a lot more open with me. The other VCs are also a lot more open with me, right? And so if I understand both their perspectives and stuff like that, it's very easy for me to really put it in a way that each of them can understand. So then that essentially puts the company on that path, right? And that's one of the reasons why I haven't really taken a VC route to be part of a particular VC and stuff like that. If I get married to a particular VC, then entrepreneur will not treat me as a fellow entrepreneur. They'll treat me as a VC. Then I will lose that edge. And this is what I saw over the last, 5-6 years of me investing and things like that. So yeah, entrepreneurship comes naturally. Investment doesn't come naturally. Right, it's very difficult to learn. But I think it's more satisfying to be part of the journey than looking at zeros. So
that was a fantastic and insightful answer. I hope whoever had those questions would have been answered. And going back into the neobanking space, again, there is another question is regarding tax havens and how some startups tend to move to tax haven countries for whatever reasons. So do you think that can happen in the neobanking space as well, or is that more tech startups?
No, no, would happen. So, for example, we are also a US headquartered entity, not necessarily tax haven and stuff like that, but US headquartered. Primarily because it all depends on the kind of partners that you want to really have, right? Are they comfortable with partnering with an Indian based entity or a US based entity or a foreign based entity or a Singapore based entity and stuff like that. Obviously, there are taxation slabs that are a lot more different compared to India and stuff like that. So, that's one, right, because everybody wants to understand the jurisdiction in case everything happens, anything goes wrong. So, there the compliance is a significant element in the fintech space, right, and when it is compliance, so the banks are the ones who the regulators hold on to because they have the licenses, but the banks are sharing the licenses with a fintech, right, and if the fintechs are not under the same jurisdiction as they are, all right, and if there are any compliance issues comes up and they have nothing to do, then the banks becomes a challenge, right, and that's the reason they prefer to engage with fintechs who are in the same jurisdiction as they are. That's one. The second thing is when you are looking at raising capital and stuff like that, right, people also really want to understand where the company is domiciled, right, what are the regulations that govern, right, is it black and white or is it still gray, or are there any retrospective laws that comes into the picture at a later date, then I might be under a loss, right. So, that also becomes a thing. The third thing is the currency devaluation, right. So, when people invest, let us say when people invested in us, the forex was 70 rupees per dollar, now we are at 83, 84 rupees. So, even though you get on paper you get a significant percentage return, let us say at the time of exit, if the rupee would have devalued, right, if that gets offset. So, your returns reduces to such a large extent. So, that also becomes a challenge. So, that's the reason just people want to be there, right, where they have a hold on their currency, they have a hold on the regulations, and where the foreign partners are also there. So, that's there, that will always happen. So, the startups prefer to be in Singapore or on this thing. And also, right, if you have aspirations, everybody wants to list, nobody wants to sell, right. And if you are really looking at listing, and if you think that the customer base in those countries are much more favorable to what you are doing, right, then in that case it's better to be domiciled there, right. Otherwise, the regulations in India could change. There was a talk last year where Indian headquarter companies cannot list in NASDAQ or NYSE and stuff like that, or the Singapore markets and stuff like that. If those things happen, then it becomes a challenge, because there are a lot of people, retail investors, who understand what you are building over there, not here, but you are forced to list here because you are domiciled here. So, instead of the, so those are some of the things that would really come it. It's not necessarily because of, I mean, it's not that tax saving is not the only reason. All those things comes into the picture to really make the choice between what is the structure to follow.
Very interesting observation on the listing. Ultimately, that's the
that's everybody's dream, right? So, if you really start a company, you just want to be there, get listed. So, you need to really figure out who appreciates what you're building. So, in India, I think there is this negative sentiment because of not profit making companies, right? Amazon still doesn't make profit yet. Right, Amazon stand not the AWS or the Alexa business, right, or the Prime business, Amazon as such, but it's still there, right, up there, $1 trillion, right. In India, nobody will want to invest in a loss-making company, right. So, there people are a bit more receptive, people here are not necessarily that receptive. So, you just have to really figure out, I mean, the last thing that you want to do is to get an amazing offering to the wrong set of audience, right. Even though you are amazing, it doesn't really come across like that. So, that becomes a challenge.
I think we can talk about this for another hour, but I think unfortunately we ran out of time. It was a fascinating session. I learnt a lot. I'm sure the audience would have taken back a lot from this session. It was a pleasure having you here, Raghu. Looking forward to having you here another time.
Hey, thanks, Ram. Lovely set of questions, and for the audience also, thank you very much. Thanks a lot.
A volunteer for this event to please hand over the gifts there. Thank you, Raghu and Ram, for a very thought-provoking dialogue.